Hello ladies and gentlemen, I'm your host Seth Julian. I'm welcoming you to today's session where we're going to talk about the psychology of the capital markets. We're going to talk about the psychology of the markets themselves, on charts and graphs. We're also going to talk about the psychology that we experience in our own minds, in our own guts. They're identical. We'll see in a moment how knowing about one will help you knowing about the other. The prevailing market psychology in capital markets can be characterized by the herding instinct. Now you'll see that if you ever watch nature shows, you'll see these giant assortments of creatures on the ground, on the hoof, in the air flocking, in the sea schooling. And you say to yourself, and they move in a majestic, almost mathematically choreographed action. It's beautiful to watch. How does that happen? How does that work? Only a very, very, very select few of those creatures can see far enough into the distance to know where predation lies, where water lies, where danger lies, where comfort and safety lie. The rest of them have to follow along. Ding! Follow along. Signals. Ding! Just like the capital markets. All I see is the goof of the creature in front of me. She moves this way, I move that way. He goes up, I go down. That's all I see. Signals. And I have to know how to interpret those signals or my life might be in danger. If the group is going this way and I miss it and go this way, I'm done. Sound familiar? Capital markets trading? Market goes this way, I'm ahead. Done. We follow signals from the rest of the market, and that's how we take our positions. We're trend followers. There are alternative strategies, of course, but the vast majority of traders in the world are trend followers. Why? It exploits the logic of the market. And we see that logic in the charts. Take a look. The historical charts show us trends that continue. That herding instinct, that following instinct, where the herd or the flock or the school of fish moves somewhere in what appears to be a directed manner, is how the markets operate. And we exploit that. We see a trend, we hook our little train to the engine, it carries us enough to make a few dollars, we get the hell out, then wait for the next trade. That's how it works. So that herd psychology, and I don't mean to characterize the herding mentality as violent or mob-like. No, it's not like that. The herding mentality simply means when a trend is underway, it generally maintains itself. It has legs, as they like to say. It's going to walk along. It's going to continue. The herding instinct. Now, that's the psychology of the markets writ large. And I want to point one thing out, particularly for the newcomers. You will often see these charts and graphs that look like NASA. It looks like the Cosmodrome in Kazakhstan. Looks like super scientific high-tech. Nonsense. Nonsense. When you see those graphs at the Cosmodrome or at NASA at Cape Kennedy, they're using scientific knowledge to predict future outcomes. And that's possible because that world is a deterministic rule. If I have a rule in nature that's true here, it's going to be true there. If I know it's going to be true there, I can apply it there. And on those kinds of rules, entire cities are built, buildings are built, civilizations are built, because those are natural truths. Science. When you see a chart of price, it's not science, it's social science. Economics and finance are social sciences. All these charts and graphs show us is human emotional attachment to whatever it is they're graphing. This is how people are feeling about oil. This is how people are feeling about Tesla. That's how people are feeling about wheat. War breaks out in the European landmass. 60% of the world's export is created by the two countries at war. Maybe wheat's going to go up. That's what they graph. So you understanding the human emotionality and the direction of those graphs gives you a tremendous advantage. There are two essential emotions in the trading game. And for those of you who've experienced this, you know it well, and I still experience it, by the way. I'm 65 years old, I've been trading in the capital markets for over 52 years. I still experience the same emotional excitement. We're all the same, we're all wired the same, we're all creatures that evolved from the same place. Fear and greed affect us identically. You can see, with a little practice, fear and greed on a graph. In fact, if you've been at your trading station during times of peak fear, like the flash crash of 2010, for example, or or when Lehman Brothers shook to the ground in ruins, you know that you can enter into positions and immediately become very profitable, or the opposite. There's emotion there. These graphs show how people are feeling about those assets. And so when they get into the trade, and those of you who've been in the trade know, when you start to make profit, you get excited. You start to fantasize. You start to think about all sorts of things you're going to do with the tons of money and how many people you're going to impress. And it goes on and on and on until the position turns into a loss and you lose. Because you weren't paying attention. You were focused on the emotional high of profit, greed. And then again, this is a long evolutionary history. When we were out alone hunting, maybe a soul hunter and his son, maybe his daughter, who knows? One of my daughters could have easily brought down a woolly mammoth. You get greedy. You see the creature. You're under the leaves. You're trying to hide. You get greedy. You think you can kill that animal. You think you'll be a big hero in the community. You'll come back and you'll feed them for 2 weeks. And that thing steps on you and kills you. Greed. Doesn't always wear a familiar face. And then the worst, of course, even that's the good case. When you see a potentially lucrative objective and you're actually pursuing it, that's the good case. What's the bad case? You're pursuing a loss. The markets are going down. You're caught in fear. The fear of loss makes you incapable of taking an action. What's that action? Exiting the position. So because of your fear, you don't recognize the loss until it's exceeded the margin in your account. Out, gone. Destroyed. One wonders often, how come along the side of a road you see animals who in normal life can practically fly? They can fly, they can run faster than the vehicles, and yet they're dead on the side of the road. How do you explain that? Fear. They see the headlights coming, and they can't do what they're supposed to do, and bang, they're flattened and dead. Roadkill. Like many trading accounts. Roadkill. The professional, the serious amateur, the person who wants to succeed in this business understands what we're talking about here and controls it. And it's controlled very easily by determining how much profit you're going to take before you get out and determining how much loss you're going to take before you get out. That is the only known way to overcome the emotionality of fear and greed. Stops. How much profit do I take before I get out? I limit the greed. How much loss do I take before I get out? I limit how fearful I have to become. I know exactly how much loss I'm going to experience. That is how we overcome the emotionality prevalent in capital markets trading. So, ladies and gentlemen, with that, I'm going to bring this session to a close. I'm your host, Seth Julian, wishing you all, ladies and gentlemen, the ability to trade with confidence. Bye-bye for now.